get back with another video. Today, I just wanted to look at the S&P 500 and bring a bit of a clear perspective, a more realistic perspective to understand what is actually happening with the S&P 500. So currently, we've gone on this pretty damn nice run. And now there's a lot of doomsdayers out there saying, hey, it's gone too far. The market must crash. And I think that's just absolutely ridiculous. Should there be a pullback? 100%. A pullback is normal. The market can't go up forever. That's true. But we haven't really gone up for that long. Especially since we just came out of a really pretty damn nasty dip from 22. All of 2022 was going down quite harshly, which is still pretty damn normal. So if we're going to measure it here, why is it not coming up? Here we go. So we're measuring the dip from here to here. That's like 27%. Just call it 30% dip. So whenever you have a 30% dip, and we went through a whole heap of struggle for an entire year, does it not make sense? If you can hold through all of that pain, then you will get rewarded. That's what's happening right now. I believe it's gone through a cycle, and now we're entering into a big, maybe potentially 5-year, 10-year long bull market now, and this is completely normal. So, another thing is, if we just to look, the prices were roughly at this same level in January 2022. So it's now been 2 years, because we're in 2024 now. And if we were to measure the price difference, the price is only up 3% since then. And of course, you can say, that was expensive back then. But if the price has been there, right, that means the market did value it at that price in previously. These companies have been internally compounding and growing since. So have they grown by more than 3% since then? I think it makes a lot of sense, because these are the top 500 companies in the whole entire world, practically speaking. They're known to be massive compounders, and they're very strong companies. So if we're just breaking the highs by 3-5%, right, that's not a bubble. Whenever you break the highs, usually there's some sort of pullback, but this is usually one of the best times to buy, because you normally come up, pull back, and then you go again. And when you get this dip back to the all-time highs and you test the market that it's legit, that's one of the best times to buy, because you start that new trend. So generally speaking, whenever there is a pretty decent pullback, 20%, 30%, and then it takes 2 or 3 years to then break out to those new highs, like they have here. So the new highs across the top, 2-ish years to then break out of that. Usually that's a great setup to buy that all-time high breakout, and you just go further and further and further. So yeah, and one of the reasons why it's great to buy the all-time high is because now everybody in the history of the stock market who has bought and held, not sold, they are now in a profit. When they're in a profit, what are they likely to do? They're likely to buy more. When there's more demand coming in, what is going to happen to price? Price goes up. When price goes up again, what do? They go and tell their friends and family, and you then get those. That's when, it starts to get into the extremes. Like if you're going back in 2022, like the end of 2021, everybody was talking about the stock market. Everybody was involved. Everybody was talking NFTs, crypto, all of this stuff. The taxi drivers, the Uber drivers, all of that stuff. Everyone was talking about it. At the moment, it's still only within the stock market. The traders and investors in the stock market, the people who are interested in stocks. It hasn't really gone into the public yet, or it's not that big yet. So another little thing to look at is, what I've learned is sometimes you don't want to overcomplicate looking at stocks. So I've got this chart here, which I like to call the S&P 500 Road to Financial Freedom. And it's a quick guide to understanding, how expensive or cheap is the market currently. So there's been this uptrend since the 2008 financial crisis in 2009, and it's held perfectly ever since. You can just see it's a parallel channel just going from the left-hand corner down the bottom to the top right-hand corner, and it just goes up perfectly straight. So the way I like to look at it is, whenever the market dips down to the green line or below, it's extremely cheap, right? Extremely, extremely cheap. Whenever we're at the white line, that's a fair price. And then whenever we're at the red line, that can signal we're quite expensive. And now, the only time when I would start to really get scared with the market is if we started breaking out of this and we started going like that. If we started going up like this, then I'll be scared that the market will overcorrect. And that's when you really have to be worried. But if we're pretty damn close within this band, I feel like there's nothing really to worry about. So some quick notes as well is, if we're to look and split this channel into two halves, the top half and the bottom half, just eyeballing it, where has the market spent most of the time? The market, to me, has spent probably 70% or so, just eyeballing it, in the top half. So if we're going to draw and circle the bottom half, here, 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 there, and there. Now the rest is all of this. It's all of this, right? It's always in the top half, right? And that makes a lot of sense because the stock market is not that easy, right? It makes sense that you can't always get a bargain. You know, you can't have a bargain every single day and profit from it. So generally speaking, the market is at a reasonable price, if not heading slightly towards a little bit more expensive. And now, where has the market spent most of its time? It's between that dotted line there, the white dotted line, and this white solid line. And where are we today? We're right there, dead bang in the middle of that band. So everything is perfectly fine. Now, looking at it like a baby again, or a young child, what we want to do is just look at how the market moves. How does it go up and down? So if we are to measure the most recent move, we had this pullback here in October last year, and then the market went up like that. And let's make it a, what's got to stand out? Let's make it a, let's go orange, right? So we've got an orange here. Now everybody's saying this run is too much. The market has to crash. Maybe the market has to pull back, and that's healthy. I would love a pullback, because if we started to pull back now, maybe if we pulled back to the most recent high, so we have a low here, a high, a new higher low, and a new higher high. If we pull back to the last high, that's textbook price action. Textbook price actions. So if we pulled back here down to 4,600, that would look perfectly normal in the chart, right? And that will put us back into the bottom half of that band, which signals again cheap prices. And if we got that pullback, how big of a pullback would that be? It's about a 10%er. So if we had a 10% pullback right now, doesn't have to, can keep on going. It could easily go another 10%, before we pull back. That could be normal too. If we were to look at the price action back here, let me draw it. Look at this bad boy. That went straight up, right? That's like double this orange line here. So it could go up another 10% before it pulls back. But if the market is extremely healthy and we get this pullback here, that's exactly what we're saying. Market's extremely healthy. That's probably like the best buy you can get for the next 5 years, honestly. That would set up the next big bull market. The market's testing the previous high and we're good to go. So I just want to focus a little bit more on this orange line here. And just to show it's a great run, but it's nothing crazy. This line here looks pretty similar to me, Another way to do it is, just get your hands and you just measure, hey, this is on my screen, it's about 3 centimeters. I'm just on my laptop. Now let's start zooming out and get a bit of a better perspective. COVID. Let's see how crazy COVID was. Boom. All right, you get a bit of perspective there. This run from here to here, quite similar. Obviously, that was COVID and we had the big correction. But what about this? From here to here. right? Obviously, the angle is more steep recently, but if we did a little bit of this, right, then the angle wouldn't be as steep and it would be like that, which is exactly the same as this. So, what about this? What about this fella here? Boom, like that, right? All this one here. After the correction, big run and decent pullback, test the highs and go again. So if we're to look at this, it's really, it's all standard stuff. There's nothing really special yet. So that's practically my thoughts on the S&P 500. Have we been rewarded for holding through a tough time? Yes, that's exactly what should happen. If you hold from, a period of going down and your dollar cost averaging in while the price is going down, you get heavily rewarded for it. Because, I don't know about you, but when you got your whole entire net worth wrapped up in this stuff and you're going down 30%, potentially more if you got a lot of tech stocks like I personally have, mate, that was a tough year. That was not an easy year. So now getting back to break even, we're only up 3%. We haven't made that much money yet, So, yeah, it's nothing crazy yet. Just expecting a small 10% pullback. And if we get that, perfect buying time, in my opinion. Obviously, do your own research, speak to your financial advisor. But for me as well, I'm 30. I'm willing to hold these names for 30 plus years. I've only been in this game for 10 years. I'm willing to hold like minimum 30 years. Any investment that I look at, I'm willing to hold for 30 years. So, I've got a decent sized position in Nvidia. And yeah, it's going pretty damn crazy at the moment. But when I ask myself, is it going to be higher or lower in 10 years? For me, the answer is higher. 20 years, even higher. 30 years, even higher. So that's the time frame I'm looking at. Like, I honestly can't look at a time frame under a decade anymore, especially when you start to factor in taxes. So if you're from a country like Australia where the taxes are quite high, you really need to have a tax efficient investment strategy. It can't just be about making money. So, yeah, that's another little tip for you. Like, really, can you, in your soul, honestly transition from decade-long points of view? You don't want to have points of view under 10 years, in my perspective, my point of view. Maybe, with less than 10% of your net worth, maybe you can muck around a little bit with some short-term stuff, but that's as much as I would do personally. But, we all have our own thoughts on the market. We all have our own perspective and risk tolerances. Anyway, guys, that's everything for the SP 500. Hopefully that clears up everything. If you've got any questions, please post them down below. I'll see you in the next one. Thank you very much.